unfortunately, Trump is trying to grow America and make America great again, but actually I think he's ruining, what America has stood for and actually boosting the rest of the world.
Hello and welcome to this week's Tea Break, alongside my co-host Yuri Bender. Joining us this week is Jacqueline Broers, Emerging Markets Manager at Utilico. Jacqueline, how are you?
I'm good, thank you. How are you?
I'm not too bad, thank you. And what tea have you gone for?
Just a very boring English breakfast tea.
That's not so boring. I love my English breakfast tea. Yuri?
Well, I've gone for the Indian tea today.
Topical.
The coverage on the radio is about the trade deal between the UK and India, and obviously the military confrontation as well between India and Pakistan. Do you feel, Jacqueline, that the focus on India is part of the shift, the broader shift from the developed to the emerging or developing economies?
We're expecting by 2040 emerging markets as a percentage of global GDP will exceed that of developed markets. But obviously with the Trump coming in and Trump economics and sort of deglobalization, there has become much more of a focus. If you look at India, why is it so well placed? Frankly, if you're looking at US-Chinese politics, it's not China. So actually India is well placed. It's got, as we always look at the sort of the underlying emerging market structural growth trends, it's got very strong demographics, it's got good GDP growth, it's got a growing middle class, but also it's 85% of its market is retail. And at the moment, you've got huge growth in pension funds coming in the Indian market, and that money has to go somewhere. So India at the moment is seen very much as a very positive market in which to be sort of situated in.
But you're also a specialist in utilities and infrastructure. And India, I was listening to a commentator on the BBC World Service who had just returned from there. He was saying it's this mixture of this really advanced tech hub and then 200 yards away, the oxen wandering around the streets, which suggests there's a lot of potential for that type of investment which you specialise in.
What we talk about very much at Utilico is what we call these infrastructure megatrends. The requirement for social infrastructure, the requirement for digital infrastructure, and also energy growth and transition. And if I look at just energy, during the Ukraine-Russian war, we saw huge volatility in pricing. And that's really sort of shaken India because they are very much net importers of fossil fuels. So they have switched completely into becoming very focused on driving renewable energies and bringing that sort of technology and developing that sector, but also to help them reduce carbon emissions. So they're reducing carbon emissions, but at the same time ensuring energy security for themselves going forward.
You did mention the Ukraine war, and that's going to be a massive infrastructure rebuild, and you mentioned renewables as well. Do you think asset managers are poised for that 1 trillion reconstruction story in Ukraine?
What the whole Russian-Ukraine war has done is really reshaken up, I suppose, like I was talking about, the energy growth and transition, the focus of companies or countries on how they source their energy. We're not just seeing that in India, we're seeing that also in China. We always talk about solar. They've saturated their own market because they are so concentrated on ensuring that they've got a secure energy supply for themselves, because as well they need to ensure energy security.
Asian family offices, are significantly increasing their allocations to private markets, driven by generational wealth transfer, diversification needs and market volatility. Once they were focused on public equities and real estate, these investors are now adopting institutional style strategies. And younger, globally minded heirs are prioritizing innovation, ESG and, direct investments.
Age group, Ali. You're a globally minded young heir.
Can this be found in private assets, particularly in emerging markets?
We invest in infrastructure and utilities assets, and what we love about these assets is that actually often they are backed by a concession contract. If you look at a transmission asset, for instance, you know what the cash flow is going to be over the cycle of that asset. If you look at, one of our companies called Manila Water, it's a water company within the Philippines, and there's just a growing demand for water. There's also increasing urbanisation, so that we're seeing more water supply coming through. But also, again, it's backed by a concession with return on equity return on expenditure of 12%. So again, we can kind of see what the capex cycle is going to be. You can predict the cash flows. It's much more stable and less volatile. And because UEM is focused on much more utilities and infrastructure, we haven't got that MSCI EM index exposure to consumers, discretionary products or banking. So actually, if you look at the beta of our fund, it's around 0.8 times versus the index. So it's much more stable. Yes, when the market rockets from the tech booms, we're not going to experience that. But on the downside, we're much more stable and much more long-term resilience. Hence, the performance of the fund over 3 and 5 years has been, and since inception, has been very solid, over 8.8%.
We have this amazing interview by our colleague Elisa Travato with William Louie, fourth-generation boss of the Kowloon Motor Bus Company in Hong Kong. This article's been read an incredible 7,000 times and rising. Yuri just
gone up to 11,000.
Going up to 11,000. Yeah, unbelievable. Mr. Louie's views is that his own region is far too volatile. You know, that long-term Asian family money has to be invested in Europe and America. Can you understand this viewpoint?
I can, because I mean, I actually know that company. We've looked at it before. Emerging markets can be volatile. That's why we love it, because it actually provides us with an opportunity. So that's what us as investment managers have to ensure, that we're trying to find that, yes, there is volatility, but we're able to play that volatility to the upside of our investors. If I come back to an energy transition company, you know what the cash flow is going to be. You can see it. So I suppose the volatility there coming is from the market discrediting it, but actually you know the value of that asset. Some of them are quite domestically focused. So actually you can have Trump shouting about tariffs, you can have macro policy changing or geopolitical issues blowing up, but actually the fundamental underlying drivers of that asset, sort of like going back to the structural growth drivers of EM markets or the megatrends that we're on, are not going to change, and that's what's providing us the stability in the fund that we run.
The family offices we speak to, and I'm sure the ones you speak to as well, for all of them, infrastructure has become such a massive investment focus. And we had an opinion piece from one of our contributors, Beat Whitman, previously at UBS, and Julius Baer, now independent portfolio manager. And he's saying the US has entered a period of strategic isolation. And he's very much echoing the view of Ursula von der Leyen, the European Commission boss, who said the West as we know it is now dead. And one of our readers, based in Singapore, Vineet Vohra, managing partner at the Leader Circuit, and I remember him at Citibank where he was very senior there. He has a great question for you around this topic, and he's asking, what would it take for Europe, including the UK where we are, to rebuild financially and make the most of the own goals being scored by Trumponomics?
Liberation Day on the 2nd of April, and then, a few days later on the 9th of April, the whole thing's halted because effectively Trump is prisoner to the bond market, and he can't afford bond yields to skyrocket because he has, a third of his treasury bonds he has to refinance this year. But I look at it, actually, that's providing us with opportunity. He's ripping up the position that the US has dominated for so many years. He's causing more regional economics to happen, and emerging markets and Europe, for once, actually Europe is standing up and realising that they need to start actually spending on defence. They need to actually rip up, the debt ceilings that they've had, and they probably do need to spend. And actually, I think unfortunately, Trump is trying to grow America and make America great again. But actually, I think he's completely ruining, I think, what America has stood for, and actually boosting the rest of the world if we can all work together, she says.
We just had our Wealth Tech Awards, where our panel of judges has been, analysing how technology is used by private banks to decide which are the best investments. Do you and your investment team increasingly, deploy AI tools, or is it still human-led, kicking the tire process?
Look, we're very much a bottom-up fund. We're also quite a small team. However, we are bringing in AI to help us with, I suppose, the grunt work of our investment process. So, for instance, within ESG now, we're able to feed in ESG reports from companies into our internally built ESG template, and it can provide us with answers. However, at the end of the day, us as the analysts are fundamental to the process. There's only so much that we believe that AI can do, because our skill as the investment analyst is to be able to look across the sectors, across the countries, and AI can't do that. It's able to help us generate the data into the models at the moment and provide us with an output, but we are still there to analyse it. We spend quite a lot of our time travelling into the emerging markets, sort of 5-6 weeks a year, really kicking the tire on the investments, going to see them to make sure, a port asset in India actually exists, see how it connects. AI can't do that. That's what we are testing, and to ensure that it's actually there and it's true, and actually we can get real value from the asset. And also meeting the management teams, which is so integral to an investment process, and also check the governance on the business. So yeah, AI is helping, but it's very much still human-led as well.
And I think, Ali, that our next stage in the development of the tea break will be putting on our overalls, going to the factories with Jacqueline, kicking the tyres, and then having a tea break in between.
Exactly, and I can't wait for that.
You're more than welcome to join us whenever you want.
Brilliant, brilliant.
Jacqueline, thank you so much for joining us.
No, thank you.
Unfortunately, that's all we have time for today. If you have any questions for our guests, please send them to us. You can watch other episodes of The Tea Break on the PWM website or the YouTube channel. See you next week.